All right, folks. Happy Thursday. Another boring week on crypto. A lot of chop happening. How's everyone doing? We have Chris in the house as well.
Hello, hello, hello. Happy Thursday, guys. Looking forward to kicking this off. We got actually some action over the past few hours in Bitcoin. Um, so again, just to kind of recap and remind everybody, kind of the changes going forward for crypto. Um, on Thursday afternoons, we're basically doing extended classes with market analysis. And some of you guys had suggested that we start off with charts and kind of do the possibilities, probabilities, and plans. So we'll do that, and then we'll move into looking at progress and development, and some of the things that we're excited about in the crypto space. Talk about the most recent news, and then any investment opportunities that we're looking at. Anything that we're excited about, and then do some Q&A.
Yeah, so we'll kick this off now with the charts, and then for those who want to stick around for the fundamental stuff, I'm gonna perhaps go off on a little bit of a rant later on 51% attacks. So we're going to
Yep.
dive into some of the fundamentals from an investment standpoint, which really kind of like digs into the crypto fundamentals. We're on Monday. Travis is talking a lot about stock fundamentals, and crypto fundamentals is very much around algorithms and security of networks and stuff like that, and the actual technology, supply and demand, that sort of stuff. So a little bit different on that end. So we'll dive into that. But first, let's look at some of these charts. So we've kind of been eyeballing this inverse head and shoulders here for a while, but it looks like there's a possibility that this might fail. We did kind of break this immediate run up that we had. We're kind of slowly moving up. We do have a little bit of a sideways range here. I mean, if it did bounce off of this level right here, because there was some support in through here, then maybe it could still play out. But if this area rolls over, then there's certainly a possibility that one of two possibilities if it rolls over. Either we end up chopping around in a tighter range, or we just break down to that, maybe that 2K level that Chris has been eyeing for a while. And in relation to that, so in relation to my crypto holdings, my plan and strategy and all of this, so regardless of what happens, what I've been accumulating long term that I've been pulling off the exchanges, I'm just going to hold. If, on the other hand, though, we do snap this, I'll probably end up cutting out of some of the other positions, including even the Ethereum one that I did a flip into cash, just to kind of free up some dry powder. I still have dry powder on my trading accounts. Like I said, my goal is to eventually convert 100% of my trading accounts into cold storage, long-term investment. I'm not there yet. I still have one of my trading accounts, so like pretty much let's say like 40% of what I had at the beginning of the year, which was profit that I had kind of hedged, is still sitting in cash, and I might reduce some of the other mid caps. The things that definitely won't be on the chopping block that I pulled off, the main markets that I'm in, long-term investment wise, is obviously Bitcoin. Majority of my Bitcoin from 2015, 2016. Oops, I don't want that. Tezos, Zcash, and I did recently buy some ADA. Although ADA is not really as far along on the development cycle as something like Tezos, although they have more volume, which is kind of ironic in crypto, because a lot of times price action doesn't even really correlate so much to the fundamentals, right? And I think we probably see this as well in legacy markets sometimes, when you can have really high P&E ratios, and you can have like still market hype above the actual value of the company, and there's still like a lot of emotion and stuff. But I feel like there's a lot, it seems like there's a lot more of that in crypto. And just like one example of that being that, if you look at something like ADA and Tezos are very, very similar, right? They're very similar, but the difference being is that the Tezos network actually has all its features live right now, and ADA and has like more nodes and such, and ADA doesn't really have that, but its volume, it's got tons of volume because it launched a lot earlier, right? They didn't necessarily wait for, I think they might even still be in testnet, if I'm not mistaken. But it's got crazy volume. So this is versus like Tezos, which doesn't have crazy volume right now. So that's like an example. Or another example being that Ethereum Classics being 51% attacked, and I'm gonna go into that when we go into the fundamentals and news section. But as 51%.
Hey, Rock, before we jump into that, you want to do possibilities and probabilities of Bitcoin right now? So
yeah,
we'll start with that and then lead into the other stuff.
Sure. So
and I sent you my chart if you want to pull that up whenever.
Yeah, can you post it in the room, just because I don't have Discord on this computer? Yeah. Or not the room, sorry, the chat.
Yeah.
I'll post it up. All right.
Yeah, and I'll post this. So guys, what we'll do too is we have a lot of like articles and news things that we're going to post, and instead of putting those in the general chat, we'll put those in the crypto news alerts. That way, I kind of keep a record there too.
So yeah, basically, this is Chris's chart talking about how the inverse head and shoulders now lower probability because of this recent sell-off.
Yeah, so if you guys recall from last week, that I was saying like I really wanted to see a break of that neckline first, because without that, that's just a really strong resistance area. And one thing that we talk about with price patterns, specifically reversal patterns like double tops and head and shoulders and wedges and stuff like that, is like, just because you're seeing a head and shoulders, that doesn't mean that it has to reverse, right? Like we can go back and find a lot of cases of like failed head and shoulders patterns. And so the trigger for an entry on a pattern like that is a neckline break, which is why I was waiting for confirmation of that. And this is just a good example of when, and we talked about this last week, the possibility number 2 of if you get fading volume and then buyers aren't able to step in, this is what happens. It rolls over, and then anybody that was buying in anticipation of that break, what they do is they bail out, right? And then it creates like this cascade effect of selling. And so, yeah, so again, just to kind of like review the 30,000 foot overview, possibility number 1 was a head and shoulders neckline break to get us back up to retest that prior area around 5,500 to 6,000. And then I noted on that chart, I said lower probability of that happening with today's price action, right? We kind of challenged that resistance level, price rolled over, and then we've got a little bit of volume on that selling. And then so possibility number 2 is if we break below that right shoulder, then there's a higher probability now that we're going to get an extension to the next major price level that Rocky was showing on the daily chart. And the reason why I think that's a higher probability, and we can run some extensions. I'll post another chart in the room here of how I came up with kind of the low 2s as the next area. But really, I put 3 things. So the reason why I think downside is a higher probability here is the broad trend is still in a bear market, right? We haven't had any confirmation that the longer term trend has shifted, right? B, market sentiment is still negative overall. And C, there's bearish pressure from ICOs that are like selling. And that's more speculative on my end. That's just kind of something that I'm I'm seeing and I'm kind of, guessing. And there have been some like reports of founders and ICOs like bailing out and selling their, whatever crypto they have raised. So, my plan then, with looking at those possibilities and probabilities, is I'm not buying, so I'm not looking at a trade until we see a shift, an immediate price action direction shift, right? So like a break of that neckline, and just being very patient, because if Rock, can you pull up the daily? If you look at just the longer term trend from basically the last 12 months, there hasn't been confirmation of any kind of shift, right? The first sign of that would have been a neckline break. And as Rocky's showing, just lower highs overall. We had the 6K line of hope, right? Which when that snapped, it just gave more bearishness and an extension to the downside. And so what I'm looking at here, as if we break this right shoulder, here, Rock, I'll post this fib extension that I had drawn, which basically just shows like if the bears win out here and bulls aren't able to hold up, the next level that I'm looking at is somewhere around like the 22 to 2400 zone. This lines up with an extension from basically the 6K break. And I see a lot of confluence around that 22 to 2400 zone. So here's this chart. Yeah, and the other thing too is, wait a minute, CNBC said to short? I thought they were showing a bounce play.
No, they got stopped out. It dropped below their stop. Their stop was
so now they're flipping short.
So now they're seeing the short, and it's probably going to bounce into a bar.
Oh my God! I really wish CNBC would just stop. Just stop, man.
Yeah, they're kind of embarrassing themselves.
It's bad.
Unless it's ultimate market manipulation and they're trading against their own calls.
Yeah. Just yeah. I like the counter indicators when you have like big volatility, but they just keep posting these charts like it seems like every other day. I don't even pay attention. You guys are usually the ones that show me their charts in the chat, but
they're going for like 5% moves,
yeah. I mean, it's insane.
It's
yeah. So anyway, so looking at that confluence area, if the inverse head and shoulders doesn't hold and we snap that right shoulder, we're likely to see a extension to the next major confluence zone, which is really in the low to mid twos, right? So I wouldn't short it. For me, I don't see a short unless we get a 1, 2, 3, 4 breakdown pattern. I just don't like to short kind of mid-range like this. And again, I'm not going to buy until we have confirmation of that shift. Now, again, you have to think of your capital buckets, right? When I say a buy, I mean like a trade, like a swing trade. As far as accumulation for a multi-year hold, which is what Rocky and I are actually more focused on this year, I bought a little bit in the low fours, something close to a 10% accumulation of a full size, and I'm just waiting for confirmation. So Rocky played it a little more aggressively. I'm playing it more conservatively because that's just how I do in a bear trend. And until we get the only way that I'm going to size up in my accumulation portfolio is when we have confirmation of a shift. And again, the two things that we look for is either a reversal pattern that worked or a massive capitulation dump, where if we can get like a 30 to 50% sell off over the course of 1 to 3 days with extreme volume, that's when I would also buy. So we haven't had either one of those scenarios since really the first dump into 4,000, but since then bulls haven't really been able to do much, right? We've just had that like fading volume. So it, if we drop into the twos fast, like over the next say like week, and we have a 30% or more dump on extreme volume quickly, I typically buy those dips. If it's a slow grind where it's just like Bitcoin's down 5% today, another 7% tomorrow, and it's just like a systematic selling on regular volume, I don't try to catch those falling knives. The only time I'm really interested in buying a dump is when we get a move of over 30% on extreme volume, because what happens there is you get like a true panic, right? And everybody who wants to sell kind of rushes for the exit at the same time, which causes a really big percentage dump. And that's where you can get those really nice bounce plays. So until we have that, or until we have a reversal pattern that actually works, right, that gets a trigger confirmation, I'm just being very, very cautious and very, very slow and patient.
Yeah, this is the market, from here to here is really slowed down a lot. The volatility has dropped, it's slowed down.
You can even look at average volume, right? And
yeah, we're not getting the same like wild swings that we were getting for a few years.
Yep.
My personal play is if we come down to this 2K level, as far as my longer term accumulation holdings are concerned, I'm actually planning on taking some of my longer term BTC from 2015-16 and putting that into some stuff. The reason for that is because it'll get, the lower that goes, the less of a taxable event that'll be, because my cost basis for those coins are still lower.
Yep.
So that's kind of my rationale for that, but I don't really want to do that with prices up here, because that would still trigger like a bigger taxable event for my longer term stash. Yeah. And I'm just kind of, going for the trying to do a cycle to cycle play on the next round. And I think, and we'll dive into this in a bit, but I think there's going to be a lot of coins that are going to continue dying and such. On that note, looking at Ethereum, I think so obviously everything's still correlated, right? Lots of blood, the odd things, green, but some random garbage.
Most things that trade real volume are very, very correlated, right? Which is a lot different than we saw in like 2016 and even 2017. It was like we saw, quite a bit of inverse relationships. We saw some stuff just kind of dissect from everything else. But this is just like a very everything's following Bitcoin.
So if you look at Ethereum, its resistance point that it hit is actually lines up with the support point right here, right? Now, ideally it would be nice to see this come up a little bit higher, but it seems like it's just correlated, right? And then it broke the immediate ascending trend line, which can be an early signal to cut. It did have some nice volume, like we pointed out before, but it might need to continue to play around in these in the slower region. And I haven't really, I'm in an ETH trade right now from doing a flip. I flipped it when we were down here from my BTC that I bought higher up into ETH. But I'm not actually planning on accumulating Ethereum unless we go a lot lower. I'm kind of being a little bit stingier with it just because it's been through a few market cycles. With the other coins, it's a little bit trickier to figure out its fair value because some of the other ones have only had like either one bull cycle or, in the case of Tezos, zero, because I don't really consider the pre-market futures a cycle. So there's not a lot of price discovery on that. But in my opinion, I think 50, the 50 mark and under is where I would start to get interested in kind of reaccumulating Ethereum.
Another possibility I see too, Rock, is if 100 holds, right? Yeah. Say we do like a Bitcoin in 2015 where it just flatlines in between like 100 and 200 on Ethereum,
Yeah.
then I would start to accumulate. But yeah, I mean, you can see right now it's just the price structure with runs, retracements, lower highs, prior support, turned resistance, holding, right? So yeah, if we did something like that and say like 100 started to actually become true accumulation, then I would start to accumulate there. But right now it's not confirmed. So like say we go another couple of months and we see some like higher lows and we see some nice buying activity, like that could be a possibility. But I think it's just dangerous trying to pick a bottom in it.
Yeah, and the reason why an accumulation range could be a transition is because we would start to see like multiple tests for an equal highs, right?
Yeah.
Which can be a sign of a transition. Whereas like even all this year, we haven't even seen equal highs on any of these charts, including Bitcoin,
Yeah.
right? Except for that like little fake out or bull trap that we had on Bitfinex with the whole tether thing, right? That was a little bit of a bull trap there. But like on a lot of these, like Ethereum or whatnot, we haven't had any equal highs yet. So if we get a couple of tests like Bitcoin did in 2015, or if it breaks out of this and starts to produce higher highs and
Yep.
higher lows, then that's another sign as well. You know, the thing is like if it does that and it's in the disbelief phase, it could take a while before the markets go nuts anyway. So it's not like one has to, FOMO into every little move.
Yeah, that's the benefit of looking at the much longer term picture, right? And Rock, can you pull up Bitcoin just to show like 2015 for anybody that isn't familiar with that to kind of compare?
Yeah, so Bitcoin 2015. So you can kind of see it had lower highs, lower highs, lower highs, and lower lows too. What's different about this year is we had more equal lows at the mid-range level, and then it broke down for some lower lows. But then you had retests of resistance. So you had equal highs, equal highs, equal highs,
Yep.
right? So
And
just
that's
really,
when it kind of became accumulation just by the fact that it was holding up and retesting highs and yeah. And then so that guy's right there for anybody that isn't familiar. This is like a true accumulation price action. And then the first trigger that the longer term trend was changing was in November 2015 when you broke that high. And then we go, oh, wow, maybe we're going back into another big bull market. And then our kind of like quote unquote like pie in the sky profit targets were 3K. So we were thinking, man, we could 10x from here, from 300 to 3K. Little did we know that human emotion would take over and drive it much higher than that. But that's the beautiful thing about like just thinking long term, right? So that's kind of what I see in Ethereum is like if we can get something like that, that would give us time to accumulate and confirmation that we're actually in that type of accumulation phase.
yeah, and Bitcoin doesn't disappoint. Like we thought 3K, it gave us 20K. And that's typical Bitcoin fashion. Now, what would be an anomaly? Let's say we did go to the 2K, and this is something we should probably explore. Is it would kind of, I think it would be an anomaly if we went down here, as in it would be a 91% drop, which means that the recovery process might even end up taking longer if we go down to that level. Because that would kind of be interesting because we technically have a lot more liquidity than we did in 2014 and prior years.
Yep.
But if it went to that level, it would drop lower.
Yep.
So this is an 87% drop. This one was like a 83.
Yeah.
And I don't know if I got any data before that. I know you pulled up a chart before
Yeah,
that.
I think Bitstamp's the only one that goes prior to that. But yeah, I mean, to me, those are all just like full cycles, right? If it's 87 versus 91, like I just look at those all as like very similar, and that you basically do I call it a full retrace of the market cycle, and the reason why is like anybody that got in anywhere like higher up, they usually puke out at those lows. That's why you get those 30% washouts like January 2015.
So yeah, so this is like kind of like a full retrace to a major resistance point on this. This is kind of like a bit of an ascending triangle type thing, and it came all the way back down. And you know, typically they say market cycles will retest the prior all-time highs.
Yeah.
I mean, so this would be the absolute, we're just play the absolute worst case scenario. And you know what, this could all just be noise because we could still bounce and complete that head and shoulders. This could also just be a fake out, right? Or not fake out, but just a little shake out. But if it went all the way down there, then that would be.
If we get into the twos or even into the, like, yeah, if we did something crazy like that, especially if it was a washout, I would go very heavy. I would get as aggressive as I was in 2015, for sure.
Yeah, this is like sell the Lambo territory.
Sell the boat.
This is, yeah, liquidate the Lambo. Yeah, sell the boat territory. Yeah, that's right.
Travis.
And
then we'll buy a fleet on the next cycle.
Chris will be riding a canoe at this level. This is Chris's canoe level, where he sells the motorized
canoe, tent. So anyway, guys, so we'll keep it moving. Again, we want to kind of start by looking at the markets, talking about possibilities and probabilities, and then focus on the longer term picture, right? And then, again, for anybody that is taking trades like shorter term, anywhere from a day trade to a swing trade right now, you really want to make sure that you're planning that trade, risk to reward. Where's your stop zone? Where's your profit targets? How are you sizing that, right? And again, my opinion and my personal strategy is I am way, way, way more conservative on the backside of these market cycles than I am either an accumulation phase or the early stages of a new cycle, right? That's when I go very aggressive, as you guys know that were with us in 2015 and 16. When we're on the backside, when we don't have confirmation of a bottom and when we don't have confirmation of accumulation yet, you just have to think about more downside risk. So the biggest thing that I would say is just make sure you're planning your trades if you're taking trades at all. And like Rocky and I have said, like, we personally are more focused on the longer term picture right now until we go back into another cycle where there's capital inflows into crypto, not deflationary prices, right? So does that make sense, guys? Is everybody with us on like the current possibilities and probabilities and where we think we are in the longer term market cycle? Everybody good on that? Cool. Thanks, guys. So in addition to that, one thing I'll say in addition is, like, when it comes to altcoins, like basically because everything's correlated, my opinion is the same for like smaller cap coins too.
Yeah, for sure. So I'm going to share some of for my investments, even though I'm holding stuff the way I look at it, either I hit a certain price point or a certain time period. So I'm willing to hold what I have for a few years or a certain price point. If that price point were to happen like next month, then my hand would be forced to take profit. One of the things that I invested in last year is called Holochain. This week kind of popped up a little bit, sold off. There's like a little spike in volume. I bought this at 5 Satoshis before it actually hit Bitfinex. And just a reminder of where, and these targets are like my ideal price targets where I want to take profit. It doesn't necessarily mean the market's going to go there or produce that, but this is kind of like where I'm going to start taking stuff off the table, and I'll just wait until that happens. So one zone for this is around the 50 Satoshi area, which would give me a 10x from the 5 Satoshi area. In order for this to happen, Bitcoin would actually probably have to hit a bit of a trend reversal unless for some reason alts decided to decorrelate, which we have no evidence of. So that would be, I would probably sell about half of my position on a 10x, and then the rest would be at around 100. And perhaps this is like a low Satoshi coin. Volume was actually pretty good on it this week, but again, longer term play. Stuff like this could end up having like similar cycles to stuff like Dogecoin, where it has its low Satoshi to high Satoshi cycles. This is still very much in price discovery, as you can see, still kind of newish. So it's certainly a slow cooker. Like I said before, my first major price target that I'm gunning for on Tezos, where I would sell a nice chunk, maybe like I'd say 20%, is at the $10 mark. I'm not saying that's going to happen, but that's where I would like to sell. Until then, I'm just going to keep baking and staking. Right now, it's obviously only at 48 cents, but $10 is my major price point. That I'm talking like next cycle type of thing, right? Everything would have to turn bull for that to happen. For Zcash, my initial price target that I'm holding for my investment is 4 digits. So it's got to hit the $1,000 mark. I believe that could be a possibility as we line up into 2020, the Bitcoin halving 2020. I'm kind of like, my timeline that I'm projecting investment-wise is around the Bitcoin halving. I think that I've kind of projected out 2020 to 2021. Things might just kind of start cooking around the 2020 zone. It might actually go into 2021 before we can actually maybe break an all-time high, if we break an all-time high. But in that case, what I'm gunning for Zcash as my second largest position besides Tezos. Tezos is my first largest position, and the reason for that, I still have $50 as a major target too, but at $10, what I'll end up doing is pulling out all my risk capital and anything I've managed to bake leading up to then, and then I'll keep 80% of the original position, because by that point, if it ever hits that point, the passive income 8% returns on what I have now at that $10 mark will actually be at least 6-figure passive income if it hits $10, which will be a nice passive income stream. So that's why this is my heaviest position right now, predominantly because of the ease and generating those passive returns, and also all the fundamental reasons that I pointed out. Zcash for me is like, it's got to go 2 digits to 4 digits. It almost hit 4 in the last cycle. I think it went up to $800. But I think 4 digits would be like a big euphoria moment. ADA, and I also kind of based this, I was looking at market caps of Ethereum and Bitcoin, predominantly Ethereum. I was using Ethereum as a metric. Its market cap at the highs, a lot higher than it is now, of course. And then just looking at the fundamentals and the underlying tech about, which projects I think are the best as far as investment wise. I think fundamentals are really, really good for longer term investments and helping determine which projects will actually be around by then. Due to market correlation, probably anything that sticks around will still go up. I mean, last bull cycle, everything went up, right? There wasn't any one coin that was more special than the other. A lot of them went up, although Ethereum definitely took the cake because it went from 40 cents to $1,400 in a few years. So that's obviously 3,000x gains. That's fairly significant gains, right? So obviously it took the cake. Ripple did really well as well. So some of these definitely outperformed other markets, but everything went up. But here's the thing: a lot of coins died. A lot of coins did not make it to the next cycle. There's a lot of proof of work coins that died off, a lot of scam coin ICOs, a lot of garbage that didn't make it to the next cycle. So that's where in my opinion, the fundamentals can increase the probabilities. And that'll actually, I'll use that as a segue into the news events and the
Hey,
fundamentals.
Rock, but before we jump into that, just a quick question. As far as like risk management on these longer term altcoin positions, are you just managing risk through position sizing and thinking about it like venture investing, where it's like you're either gonna hit those profit targets or take 100% loss on the position if the project fails or whatever? Or do you have like stop loss ideas, or is it just like a true investment where it's either going to hit your target or you take a full loss?
Yeah, I'm going with the kind of the venture, the angel investing approach with these. So
Yeah.
I have X amount, basically I have X amount of capital that I'm putting in that was from my trading accounts, which was basically profit that I'd hedged on multiple exchanges
Hmm.
last year or in the highs. But that doesn't represent the entirety of my net worth. Obviously, I pulled out and diversified out of crypto entirely. My simple rule of thumb is anything I pull out of the crypto markets, I never put back in. Once money comes out of the crypto markets into the bank account, and then once that gets put into other things, it doesn't go back into crypto, unless of
Hmm.
course Bitcoin went down to like $200 or something. Then obviously everything else I have would be wrecked. But I would.
Yeah, yeah. So that one reason I wanted to bring that up is just to make sure that all you guys that are listening understand the difference between like a trade and a true like long-term quote unquote like angel investment or like early stage venture investment. One, you predefine your risk and your discipline, and you get in and you get out, either it hits your profit target or you take a stop loss with predefined risk. Or in these longer term plays where you're like, okay, this is a multi-year hold. If this project does what I think it can do, I'm going to make X return. Or the because it's a longer term play, the risk of the project or the company or whatever you want to call it failing is also pretty high. So then the best way to manage risk is risk management, right? Like if you're getting in these altcoins super early and you freak out if there's a 50% drawdown in the price, you're doing that wrong, right? That's just a very different risk management mindset from an actual trade, right? And I feel like a lot of people kind of blend the two and they don't separate them as separate strategies, and they are very different strategies. And again, the biggest thing is if you're getting in super early on these projects and you are very price sensitive, meaning you wake up and you check your portfolio every day and you freak out if you take a drawdown from your entry price, that's not how you do it. So I just hope that's clear.
Yeah, for sure. Just one question. Someone asked me what percentage would I sell of my Zcash if it hits $1,000. I'd sell 50%.
Yeah.
That's kind of my goal. So these are long-term goals. Whether or not they happen or not is another story. But in my opinion, I've been picking and investing as far as altcoins are concerned. Obviously, Bitcoin's the best, but as far as alts, in my opinion, I feel like these are the best of the best. So if a lot of these die, then I think crypto as a whole would be down the gutter, right? Which I don't see happening for the industry, but you never know. It could definitely happen.
Yeah.
One last thing, just wanted to point out here. If we do break down here, then we see, everyone knows I like to look at the stochastic RSI on the 1 week. It's usually the only time frame I look at it, just because, anytime it crosses under, it usually means a big move as momentum recharges. And, it might cross over with this breakdown, which would increase the probabilities of hitting that 2K level. So let's see how this plays out. Going back to, now I want to go into events and fundamentals. So the biggest, as you all know, because I posted this, the biggest event that happened this week was Ethereum Classic getting 51% attack. I'm still working out the details on ADA. I got to put some more thought on ADA since it's a newer buy and it's my smaller of the positions, right? Just because they're not as far along in the process as those other projects that I chose. So it got 51% attacked. And for those who don't know what that is, it's basically when somebody owns 51% of the hashing power, and then they can double spend coins. They can like rewrite the history of the blockchain, right? So obviously, the reason why blockchain is so potent and why Bitcoin is so potent is because it is a immutable ledger. What that means is that you cannot change entries on that ledger. This is why you don't need middlemen, why you don't need central banks and governments and all that stuff to maintain the ledger, and why you don't need trust in a centralized third party, because the ledger's kind of autonomous and you cannot rewrite it. It is permanently stamped and forged, unless it gets 51% attacked. And so this is where we start to kind of dig into the fundamentals of actual coins. So we have proof of work coins and we have proof of stake coins. Proof of work's using hashing power. Now, here's an interesting site for those who don't know it. It's called crypto51.app. And it shows how much it costs for 1 hour to do a 51% attack for 1 hour on a lot of these coins. And right here it says, is it nice hashable? And what that means is there's this nice little site here called NiceHash, which is kind of a marketplace similar to, it's a marketplace similar to trading, where you have like a spread and you can buy hashing power for any type of algorithm that you want. And usually cloud mining is a scam. So for the most part, most cloud mining is a Ponzi. But what differentiates NiceHash from other cloud mining services is that this is actually a marketplace. So it's not just a Ponzi, it's not just fake hashing. If you're a miner, you can rent your hashing power on here and you can put up the price that you want to rent it for. And if you're a buyer, you can just rent hashing power from miners. So it's a marketplace for hashing power. Now, what some nefarious actors have been doing is they've been renting hashing power to attack networks. You can see right now, so what's NiceHashable shows that, for example, Bitcoin, it says you can 51% attack it for $300,000. But if you look at how much hashing power you could actually rent here, it's zero, right? So very, very small amount. So you can't actually rent enough hashing power to even do that. So Bitcoin, most of the hashing power is actually controlled by big, mining cartels that make their own chips and stuff, and so on and so forth. And now, on a fundamental note, and actually you can see some coins that are actual crap. So you look at something like Metaverse, for $147 an hour, you can attack this network, 2,700% fold. So you can attack it multiple times over for pocket change, right? Same. Look at this one, Pack Coin, $2. So like all these people on Twitter that are shilling all these microcap proof of work coins and stuff. Let me just tell you, like, most of these microcaps are microcaps for a reason, because they're absolute garbage. Okay, like if you can attack a network multiple times over for $2, it's absolute garbage. And if you can still make money on garbage, you can still sprinkle some maybe low risk money into some of these, and maybe it pumps like 30,000% because Spoofy the Bear Well got drunk on whiskey or whatever. But that's kind of like gambling, right? Like if you play that game, you can make the big returns, and I've proven this strategy. I've done it on some coins, but it's kind of gambling. It's the low cap shit coins. Like, never put in anything that you're literally can afford to lose. That, like, almost think of it like throwaway money, right? Like, maybe a better odds than going to a casino type of thing if you're going to dumpster dive in Cryptopia. So a lot of these proof of work coins are trash. And so on a fundamental note, for me, you might ask, okay, like, why would I invest in something like Zcash? Why am I heavier in Zcash or Tezos or stuff like that? and not just like going in heavy on, Z Classic, for example, because one thing that protects you, it's a lot harder to attack the dominant algorithms. And what I mean by that is that each algorithm has a coin that dominates, that is the top dog. And every other shitcoin that comes after it, chances are is just a moderation of it, basically a clone coin. So Bitcoin is obviously the dominant coin for SHA-256. Any other SHA-256 coin could probably be attacked by even like just one ASIC that you buy at home, right? Because you don't see a lot of SHA-256 clone coins, right? Ethereum, ETHash is Ethereum is a dominant coin for ETHash, right? Litecoin, you do have some SHA-256 coins, such as Bitcoin Cash. And like one of the reasons why I'm not a big fan of Bcash is, in my opinion, it's just you can trade it, you can make money off of it, whatever. But as far as like an investment, as far as the actual security, the fundamentals, the security of the network, in my opinion, it's a piece of trash. It can be 51% attacked with just a fraction of the hashing power that's in Bitcoin, right? And we saw some shenanigans between Bitcoin Cash and Bitcoin Cash SV or whatever. Litecoin is the dominant coin for Script. There's been a lot of clone coins on Script, but Litecoin is certainly the dominant one. It's very difficult to 51% attack something like Litecoin. Because Ethereum Classic is just kind of like a clone coin of Ethereum, we witnessed it getting 51% attacked. And what's interesting with this is that, in my opinion, because it's so easy to attack, I think it's overvalued on a fundamental note. But we all know that crypto has a lot of hot air. We all know that there's a lot of tokens that have high market caps that are pure vaporware, that don't actually have any working product, or if they do have an application, that there's not even any users, very, very low users. So we see that this is a high market cap of, $500 million, but you could literally attack it for some pocket change. And so it was being attacked. And so this can create, the risk of this as an investment is this can create a death spiral. And what that death spiral would look like is, in response to Ethereum Classic getting 51% attack, what ended up happening is a bunch of exchanges closed the deposit wallets, deposit and withdrawals, right? Because they don't want, the risk to them is that the attacker basically sends a bunch of ETC that they mined, because they're controlling the network, to those exchanges. They dump all the ETC on the exchanges, and then they reverse the blockchain and the transaction as if it was never sent. They already have their money on the exchange. Maybe they get to withdraw it in Bitcoin or another currency, and then they get their ETC back because they get to rewind the ledgers. So that's the risk. So what ends up happening is they all close their wallets. They don't want to be subject to that. But if they don't open up their wallets, and if the 51% attack persists, what could end up happening is that eventually those coins could end up getting delisted. If they get delisted and the network's been attacked and there's no place to trade it, then suddenly you've got these POW coins that are on a death spiral to like they'll end up going extinct type of thing, right? So investment-wise, I personally believe like you can trade any coin, right? Any shit coin. If it's got volume and it's moving, whatever. Usually trades have shorter targets. The odds of your particular coin getting 51% attack during a trade might be a lot lower. But in my opinion, like investment-wise, the things that you want to kind of try to hold from cycle to cycle, you kind of want to stick with things that have a much higher probability of surviving, because if it doesn't survive to the next cycle, well, then it's not going to get to rise with the ship with everything else. And this also goes into proof of stake. Now, you might notice I went kind of, to the two alts that I went kind of heavy in investment-wise. One is Zcash, which I think is a really good proof of work coin. It's a dominant algo. But then you'll notice that I went heavier on something like Tezos. You all know the tech reasons behind it because it's a trendsetter, but it's proof of stake. So I'm kind of hedging my bets in a sense as far as altcoins are concerned. Now, it's actually the way Tezos is designed right now. It's actually it might be impossible, maybe not impossible, but it'd be extremely difficult, very, 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 very difficult to 51% attack Tezos. And here's the reason for it. There's a couple of reasons for it. Number one, in order to 51% attack a proof of stake coin, you need to own 51% of the coins. In order to acquire 51% of the coins, you need to buy those coins unless they somehow hacked an exchange. That would be a shortcut to it. If they manage to hack an exchange, you get 51% of the coins. If you end up buying the coins, you end up driving the price up, thus making the cost of the attack a lot more expensive. But let's just say that they did hack an exchange and get all those coins for free and manage to get 51% of the network. Their proof of stake system that they implemented requires a security deposit. If you're going to bake and confirm blocks, you need to put up a deposit into a smart contract. If you act as a malicious actor and do things you're not supposed to as a baker, you end up losing that deposit. So there's actually an economic penalty to trying to mess with the network. So we might start to see, so the reason why I went one of my options, I went heavy on what I felt is a really solid POS coin, is just kind of hedging my bets, because we might actually, on a fundamental note, see more attacks on proof of work coins. And this is, I think it's kind of, on one side of the coin, it kind of sucks that these coins are getting attacked. But on the other end, this is like a decentralized free market, and these networks need to prove their own security, right? They're not entitled to anything. So if they can be attacked, then in some ways they should be attacked out in the wild. I don't think it's ethical or legal to do so, but that aside, if your blockchain cannot secure itself, then what's it worth, right? And then, some people say, okay, well, Ripple can't be 51% attacked because Ripple's not proof of work or proof of stake, but that means Ripple's actually a lot more centralized, right? But that's another story. So I just wanted to kind of dive into that on a fundamental note. That's kind of the biggest, in my opinion, the biggest event, the biggest news this week.
That's a really powerful lesson, Rocky. Thanks for sharing that, man. That's, it's basically like being able to test the strength of whatever network you are either trading or investing in, right? And if it looks like it's just like super easy or relatively inexpensive to break it, like, I guess the biggest lesson there is just stay the hell away from it.
Yeah, absolutely. Absolutely. It's one thing if something's got momentum and you have a quick trade with some targets or whatever. It's another thing like accumulating one of these coins as an investment and then suddenly suddenly they're worthless because the network just got hijacked. And like I wrote an article years ago on this small cap coin. It was called Krypton. I think some of you might remember that.
I remember that one. I think we talked to them. Yeah.
Yeah, and that, not only did that get 51% attack, but like that pretty much just destroyed the network. After that, the developers abandoned it, and it was toast, right? It was toast. So there's an example, and like we've seen it this year. We've seen so ETC is probably the biggest market cap coin that got 51% attack. We saw, I think, Z Classic, and we also saw Zencash get 51% attack. And there might have been some others. So I think we're going to see, and I think Bitcoin Gold as well, actually, that's right. And they got delisted from Bitrex from that very reason. So there's a whole slew of them that got hit pretty hard last year. So this is something to keep in mind. So those are like just additional reasons why, instead of like, I'm just going to accumulate 50 coins and pray to the moon that they're going to do well, I just kind of like focusing my energy on accumulating and investing what I feel is just a handful of higher quality projects that I think have a higher probability of survival.
Awesome.
So
Great
we got
stuff,
some,
man.
we got some news events.
Yeah, there's actually quite a bit. I thought it was kind of a quiet week, but these bear markets are deceiving. Like there's a lot of work that's going on behind the scenes. And like that's why I think in bear markets and accumulation periods, it just makes a lot of sense to really look at the progress and the developments that are being made, because once the get rich quickers kind of exit crypto, that's when real stuff starts to happen. So I actually kind of like bear markets in a twisted way, because real stuff actually is moving forward.
Yeah, there's definitely a huge cleansing of ICOs, a cleansing of proof of work shit coins.
As Pomp calls them, tourists, people that just come on because they heard it's a quick way to get rich.
Yeah, the tourists, or the big marketers who joined crypto for last week, and they're selling courses on it. We saw a lot of that. Remember that?
Yeah.
So there's a lot of that kind of cleansing, and then obviously like the people who survive and who stick around are generally the ones who are in it for the most hardcore people, right? Either people who have already been around for multiple market cycles, or the people who have enough determination and persistence to stick around and see things through in this industry. And it's so ironic because obviously with the prices being a lot lower, actually there's one cool thing. If you look at I think it was, I retweeted this. It was basically like, should I buy Bitcoin? Google searches or whatever. And you could basically see like it's all the way back down to the bottom, and it was parabolic in December, right?
Oh yeah, I saw somebody tweet that. Yeah, it's like, it was at its all-time high, literally at like 19K.
Yeah. Now it's back at support at the all-time lows, right?
There you go. That's a fundamental indicator.
Yeah, absolutely. That's like definitely a market sentiment indicator. So going through some of the news, there's another, Bitcoin ETF that's being applied for. I think one of the main differences here is they want to have it approved on the New York Stock Exchange ARCA, which actually just trades smaller stocks and options instead of the higher cap stocks. And I think one of the main differences, they wanted to underpin the value to account for forks, because I think that was one of the issues that the SEC had too, is like, well, what about all these Bitcoin forks, blah, blah, blah.
Yeah.
So, so that's interesting, but we'll see. It could just get chucked in the pile of ETF applications. Something else. So I think this was an article you sent me, Chris, security token.
Yeah, this is actually interesting. So for anybody that doesn't or hasn't heard of SharesPost, so SharesPost is basically a secondary market for startups where you can buy or sell your shares of private companies like Uber, Airbnb, and this is it's actually a really nice interface. I haven't done a whole lot on SharesPost, but you can go in and you can see like the company. It's basically, it gives like a really, really simplified, kind of like a stock chart for private companies. It basically just shows like the market cap after each private raise. So like a lot of the unicorns are on there. WeWork, Uber, Airbnb, Dropbox, Spotify, Instacart, DJI, Robinhood. Basically, Blockchain Capital, which is one of the first VC funds in the Bitcoin space, is trading on there now. So SharesPost is really looking to jump on the STO bandwagon. And so I think so the first quarter of this year, thinking of like what's going to happen this year, Q1 of this year, we're starting to see like really the first trades happening on either these ATSs, alternative trading systems, or, you know, secondary markets. So like Open Finance, you know, they had their first like trades. There's really there's not a lot of liquidity. It's not like Binance or Coinbase, or it's nowhere close to that yet. I think that's going to take at least a year or more to get that kind of liquidity and that kind of trading action. But this is just really interesting. And so I'm going to do some like, maybe some video tutorials or maybe a separate class just showing some of these ATSs and these secondary like crypto exchanges. Some of them you can get on without being accredited. The bigger ones you do need to be accredited, so I can just show you guys like my accounts and stuff. But yeah, I don't know. I'm just excited about that. Anything that has to do with infrastructure of STO, I'm just really geeking out on.
Yeah, for sure. And the great thing about that is you're going to get real equity in something.
Yeah.
You know, they're going to have a business plan. They're going to try to generate profit.
Yeah. You know? And it's cool. I mean, you know, you can get actual equity in like big companies before they IPO. So yeah. I'm not saying that you're going to necessarily get a great deal, right? You're probably paying, you know, like Uber's the last round valuation was 70 billion. WeWork is over 20 billion. Airbnb's 30 billion. So these aren't like cheap anymore. Obviously it would have been a lot better to get in on the seed rounds, but in my opinion is the biggest growth potential, the biggest ROI and the biggest risk. I mean, you don't get reward without risk, but the biggest growth potential is the earlier you can get in on a company, right? And I think the public markets, I don't know. You know, we'll talk about this with Trav next week, but I think if you can get in on private rounds or at least get shares before the IPO, in a lot of cases, you're going to make a bigger return than if you wait until they list. Yeah, that's just my opinion, but.
Yeah, for sure. And what really excites me, like I mentioned before about the whole security token, is that we might actually get faster settlement times instead of the whole 3-day settlement, and a verifiable audit trail that we don't really have right now, right? Yeah. It's not like, at least not that I'm aware of, it's not like I can just call up the DTC or whatever and, you know, say, hey, can I see an audit of your securities or whatnot, right? So that might reduce things like naked short selling and stuff like that. Speaking of deals, some of you might have seen this whole Kraken thing, how they're raising a $4 billion round by reaching out to some of their select few of their clients or customers. I actually got an email from them today. Asking if I wanted to invest in it. It's like a minimum investment of $100,000, and I'm actually considering it. Like I need to do some more due diligence because it doesn't really tell me much. There's not much information. Like how many.
I think they're just in the information gathering, right? Because the only thing they sent in that email was a survey. Like how much would you be interested in investing? I don't know how much they're looking to raise, but it's at a $4 billion valuation, which is pretty damn high.
Yeah, it's a very, very high valuation. And for me, like the risk to reward on something like this really comes down to whether or not they're going to grow into, you know, a blue chip crypto company in future, or if they're going to get hammered by regulators. Yeah. Right. That to me is like the two paths, or maybe there's something in between. Now, I do know, I mean, I do like the CEO, and I do, you know, he's been very vocal on certain things on Twitter, and I kind of respect their stance. They really align with true crypto culture in my opinion. So I do kind of like them for that reason. I know their interface got a lot better. They used to be very buggy. They fixed a lot of those. They have had some acquisitions. You know, they bought a Canadian exchange. They bought CryptoWatch. Which is a trading platform, stuff like that. So I really do like the exchange, and I'm going to fill out the survey and show that I'm interested because I'd like to be on their list. But I really need to know all the full details and due diligence, right? And it is a
Yeah.
higher valuation. So it really comes down to a play on whether or not I think they're ever going to get like listed on the New York Stock Exchange, really is what I think
Yeah.
it comes down to, right? Because right now it'd be like a private equity deal at a very high valuation, the type of valuation that you'd actually see listed on the New York Stock Exchange. So I don't know like how much upside potential, but then again, like I think what's Coinbase's market cap now? I think
they raised at correct me if I'm wrong, guys. 8 billion was their last. Let me see. Oh, we can probably find
8 billion.
Yeah, 8 bill.
It's only half of what Coinbase.
I wonder what Blockchain Capital invested in. I don't know how early they were on that. Let's see. Yeah, their last raise was October, 300 million. I think that's the one. Yeah, it was an $8 billion valuation, which is up from their 2017 raise of 100 million at 1.6. So yeah, they've really grown. And you know what? Talking about just like it, which investments on the STO side I like, exchanges. I really like exchanges because they're cash machines. They basically are at some level, they're risk-free cash machines. It's just like, some traders and investors make money, some lose money. Well, the exchanges very rarely lose money. They just get a piece of everything you do. So I guess the only bearish case there is like atomic swaps. And, if exchanges ever become obsolete, which I don't foresee that really happening in the near future. I mean, maybe over the long run, but I don't know.
Yeah, like the kind of like the risk to reward for me. Like, so I think this is for me, it's kind of like a fundamental play and really like assessing risk to reward wise. On the risk end, there's the possibility that some of these older exchanges or crypto exchanges get squeezed out by bigger players and regulators, like bigger players being New York Stock Exchange, NASDAQ, so on and so forth, ICE, stuff like that, because they have more lobbying power. They're obviously in better with the regulators. So there's a possibility that some of these crypto exchanges could get squeezed out. They could get squeezed out any number of ways, such as, hey, you're trading unregistered securities and massive fines and all that stuff, right? Although on the reward side or on the pro side, this is like one of the oldest exchanges, been around since I think 2013. I do like the idea. I really do like the idea of investing in an exchange because of what you said. It's a cash machine.
Yeah.
And if on the reward side, if they're allowed to grow and survive alongside some of the bigger players, or if they happen to get acquired by the bigger players, like bought out at a much higher valuation, then I just, that would be the reward side. And so there's a part of me that really likes the opportunity in investing in exchange. And I really do like Kraken and their philosophy. And like I said, the platform got better and such, but I really need to know the details. So I'm putting this on my watch list. I'm going to answer the survey and just kind of be on the list. And I'll come back and share more details. But, the $4 billion valuation does have me a little bit uneasy because that is fairly high,
Yeah.
For a company that hasn't even been publicly listed yet. But
Travis, if you're listening, give Jesse a call and ask him if we can get it, like do a separate round at a lower valuation.
Yeah.
Yeah. Travis actually had, I guess, dinner with him, a few years ago. He was trying to hire Travis, but he was like, no, I'm going to hang out with my buddies instead.
Tell him, ask him if they accept Dogecoin.
Yeah.
All right. So
cool. All right. So that's good. Oh, and by the way, guys, I'm posting all these links in the Discord channel for crypto news alerts. So we'll just kind of keep that as a running tab.
All right. So we'll run through the rest of these quickly, and then we'll open up for some Q&A. So this is another one that you shared with me, Chris.
Yeah.
So let's see. This is
Kyle, another Austinite here.
markets are better decentralized.
Yeah, I thought this was a good article just to kind of, for anybody that is kind of new to the DApp space or like looking for like real world use cases of some of these like decentralized apps. I thought Kyle did a really good job on this article, just basically talking about how like, look, not everything needs to be decentralized. And here are some of the use cases that could be good. So yeah, and we don't have to go through this whole thing. We can just post that in the Discord channel if you guys want to read through this. But I thought it would be good to kind of bring up.
Nice. Okay, and then 2 more things from a regulatory standpoint. We'll start with the good news. Well, good news-ish, sort of. So Thailand has been giving out some licenses to some crypto firms, so that's showing some progress in Thailand. So any country that evolves their industry and regulatory structure around crypto can just on-ramp more users into the crypto space, and we all know that it all comes down to supply and demand. On the bad news, China's internet censor to start regulating blockchain firms next month. So they basically want people who are running nodes to register with the government, which is the absolute antithesis to what crypto represents, right? Because they have their firewalls and all that crap. This is just sad. This
just shows the polarity, right? Like, you have some governments that are going to embrace it and their citizens are going to prosper over the next 100 years. And you have countries that are going to try to put these dystopian things in place. And I think it's going to end very badly for them.
Yeah. They're with their, they also have this like social credit system. I don't know if you saw that at all, but apparently like you could lose your travel rights or whatever if you say the wrong thing on social media, or if you jaywalk, or if you can be like publicly shamed on social media and stuff. So it's really turning into like an Orwellian society.
I don't see that being misused or corrupted by anyone at all. I don't. Yeah.
Oh, gotta love communism.
This is not Black Mirror at all. No.
Yeah, exactly. So anyways, that's on the news front, just kind of going through some of the major events, and we could jump into about 15 minutes of Q&A. I would say because all the markets are kind of correlated right now, maybe we should keep the Q&A like non-TA focused, unless you want to talk about anything specifically in relation to what we mentioned in QA. But if the question is like, oh, can you look at a Mooncoin chart for me? I would say like, it probably looks the same as most other altcoin charts. And as we've seen, they're all correlated. So, the most important chart right now is Bitcoin, unless we see decorrelation, and we have no evidence of seeing any of that whatsoever.
Yeah.
So.
Yeah, RK says if BTC price slowly grinds down to 2K, what percentage would you consider adding as a long-term hold? So here's the thing, like it would depend how long that took and what price looked like, right? Like I can come up with what I might do in possible scenarios several weeks or months from now, but it ultimately depends on like what price would look like. So like say we did get just a slow grind down to 2K, like I'm not going to try to catch that falling knife, but let's say we did do a slow grind and then we put in another potential like inverse head and shoulders, I would probably buy on the break of that neckline, right? Because that would be the first confirmation of a reversal pattern. So that's probably what I do. I would just wait for some kind of reversal pattern to show confirmation that it's holding. Or if we get, that fast panic washout, I love to buy into those. Yes, they are risky, but if you get the right scenario where it's a true capitulation washout, where you get like over a 30% dump, and it gets you to a major market structure zone on massive volume, at least so far, like typically those bounce very aggressively. You get the V bottom bounce. And then what happens from there is that either establishes a low, right? That's either the quote unquote low, or if it's not, you have an opportunity to sell part of the position, move your stops to break even or something, minimize risk. And then if that's not the low, if it rolls back over, you close the rest and you make a little bit of money, right? That's typically how I play those. So again, it's kind of hard to say exactly what I do because we're not close to that yet, but just as kind of a general guideline, in the event of a slow grind, I don't buy into those. I just wait for a reversal pattern to confirm and give me an entry trigger.
That's
so does that make sense, guys?
And if we do get a fast washout breakdown, I better get my butt over to Austin to hang out in the boat before you sell it.
Exactly.
So we have another question in the Q&A section. When you get to news, etc., can we please discuss the multiple Russian news articles that say they're going to put 10 billion into Bitcoin? Thank you. So that rumor was created by I guess you could say a university professor who has ties to the Russian government, so on and so forth. What the rumor says is that they want to dump the US dollar and buy Bitcoin. As to the legitimacy of that, I don't know. I mean, that sounds kind of like pumpmybags.com news,
Yeah. Hey guys, at some point in the future, once I cash out of one of my private investments, and I'm gonna invest 100 billion into Bitcoin too.
Yeah.
At some point in the future, 100 billion coming up.
Now, obviously, let's say it were true, there'd be some pros and cons to that. The pros is that obviously nation states have crap tons of money, and that can certainly affect the price in a bullish sense. On the con side, that could also bring down the wrath of the United States on crypto. If sanctioned countries start, adopting it or whatever, and if it threatened their dollar and they saw it as a threat, that might not be a good thing. So it could be a tug of war. On a bad news front, I think Russia would be more interested in actually investing in the hardware and the mining, with being able to provide their own cheap electricity. That could be bad news if, nation states were able to suddenly, take over the network and dominate the network. Like if suddenly Russia became like one of the largest mining pools or whatever, that would kind of, threaten the decentralized nature of it. We're not at that point, but you never know, right? Those could be some of another reason why I have a big old bag of proof of stake as a hedge, just for any of those, one-off events, or not a one-off, but any of those events that they do play out. Another question here, someone's saying, Rocky, the other alts that I bought in the past 6 months or so, would they still be on the chopping block if price rebounds? Definitely. So all of those, none of those are really going to be in the long-term capital bucket. Eventually, they'll all end up on the chopping block and converted into higher quality projects that I want to basically just hold to the next cycle. So yes, on the chopping block. Okay, Chris, if BTC price, okay, so we
answered that one. The next one I see, Harry says, so if this technically denies a reversal of the Head and Shoulders, if it fails, is it worth finding a place to exit recent trades, not investments? Harry, so I mean, you need to have a plan for any trade. If it's a trade, right, you need to predefine like what your risk is, like what's your entry, what's your stop zone, right? Like if you're getting in and you're saying, well, should I cut it if it does X, Y, and Z? Like you need to think that out before you even get into a trade. So if you don't know where your stop zone is and you're in a trade, that's actually a problem. You want to predefine that stuff. So and that's the biggest difference between, like a swing trade and a long-term like investment or a multi-year position hold, right? One is very disciplined. One you enter with predefined risk to reward. You know exactly what you're looking for. You know where to get out if it doesn't do what you want. The other is, hey, I'm getting in and I'm potentially risking 100% of the capital that I put in this position, right? They're two very, very opposite ends of the spectrum.
Here's a funny question. Can you please go on a rant regarding the BTC alts correlation, Bart Simpson patterns, algo manipulation, and when are we going to have a true price discovery? I think chances of ETF in this grossly manipulated and pushed around Ponzi market are close to zero until we hit 1K and below. Please comment. Since February, we had no real BTC crypto market that we were used to, really. So that's there's a lot loaded into that question. But so yes, there's a lot of algorithms in crypto. I would actually dare say that probably 80% of crypto trading volume is bots and algos, similar to the other markets. One proof of this is the extreme correlation, right? Most of these bot algos are the instant Bitcoin like even sneezes, everything just starts to dump at the same time or pump at the same time or what. So these are like arbitrage algorithms, right? People are running arbitrage algorithms. Sometimes they're like, trading pairs on the exchanges, or just following Bitcoin, just having bots that automatically follow Bitcoin. So this is what creates a self-fulfilling prophecy. It's certainly not like, and you can watch this happening like instantly in real time. You know, if Bitcoin like suddenly on the minute chart dumps, all of a sudden everything else starts to dump. It's not like thousands of traders logging in all at the same time to dump within that same minute. It's algorithms doing it. And then the other traders, they come in and they add to that, right? And they cut out their positions and so on and so forth. But, crypto's a lot of developers, a lot of programmers. So naturally there's a lot of bots and algos.
And Rocky, just to piggyback on that, that's why I don't think it's a good idea to day trade crypto. Like every now and then we'll get like a scalp opportunity, right? Where we have like a 10 to 20% dump. And then, but I don't think we've really been doing that recently. And for like the average person, I would say you want to stay away from like short-term trading, like intraday trading, just because there are, especially in a low volatility environment where you're doing the Bart Simpson, like chop price action, like the odds of like over trading or like placing emotional orders like that just goes through the roof. So that's why we tend to start by looking at the big picture and then only taking trades when we feel like there's a higher probability scenario where we can get good risk reward.
So for anyone who doesn't know what the Bart Simpson pattern is, this is, I would say, like a relatively new phenomenon that started in 2018. We didn't really see this a lot before. Where you basically, it will look like Bart Simpson, right? Like it would spike up, it would chop around and then do a full retrace, or do a full retrace, spike around and then pop back up for a full retrace on the upside. And just like, it's just very like choppy price action. And I think one of the main reasons why this happens is because right now, I think it's because of futures leverage junkies, right? Like the majority of volume happening right now is happening on BitMEX, which is all synthetic volume because of leverage. You can go up to 100x leverage, and you're not actually like affecting the real supply of Bitcoin. You're not affecting the spot markets because it's just the derivatives. And so between that and maybe like combine that with, BitMEX has been around since 2013. So I wouldn't just say it's entirely around BitMEX. This is kind of like a new phenomenon we start to see a lot more since CME and CBOE. It also kind of lines up nicely with CNBC and their crappy like 3% trades that they keep posting that are always wrong. So I wonder if there's some kind of play there, because it seems like since the launch of futures and since we got into this like slower grind area around here, away from this big volatility, that's almost like Bitcoin's kind of being treated like a high leveraged forex market type of thing, like what you see a lot more like the forex markets or other commodities markets that have high leverage. And I think, Chris, like you were saying that you witnessed like commodities getting kind of taken over by algos, since because like you were right there on the cutting edge when trading went from the pits to online trading, right?
Yeah. So when I was in high school around like 2000, 2001, that's when, like really like high speed internet was starting to come out. And that's when I started becoming like really obsessed with the financial markets. And so I started trading futures in high school, and it was a relatively like human based market, right? And then like around 2008, around the global financial crisis, and I didn't realize this at the time because I had no way to know. I mean, we were just like day trading the futures markets, and there was like really awesome volatility. But it was like around 2008 the algos really started to kind of manipulate price action on a shorter term basis. And then what happened was every year after 2008, and you guys can see this on like if you look at like the S&P 500 over the past decade, since 2008, every year volume and volatility were falling, and then you had competition which was increasing, right? So you had like these high frequency trading firms that were spending hundreds of millions of dollars on like microwave technology so they could shave off like fractions of a millisecond. It was getting ridiculous. And so here you had like, it was basically like the volatility was falling, so the pie was getting smaller and the competition was increasing. So a lot of like individual retail day traders, which is what we were, got pushed out, right? And that's why like in 2013 I just really geeked out on Bitcoin, because the competitive landscape in the trading arena was so much less competitive, right? And then like our prediction, like we were talking about this in 2015, talking about how algos were coming, like and now they're here. And I just think that it makes more sense like to not try to fight or compete with algos. You just can't do it. Humans are slower, we're emotional. So the way to actually make money trading crypto is on a swing basis or accumulation or position sizing or position trading, multi-year holds, right?
Yeah.
That's why like my average hold, even in 2015, 16, and 17 was multiple weeks. We go for the bigger percentage swings as opposed to trying to day trade for 1 to 5% moves. Like, it's just more work for less profit, right?
Yeah, for sure. And one possible racket that some traders might be doing, and I don't suggest this is legal or ethical or whatnot, but if someone, let's say you had like Spoofy to Bearwell, who had 10,000 plus BTC, what they could end up doing is playing the spot market against the futures market, and then saying like, okay, well, I'm going to dump thousands of BTC here down to here, but before I do that, I'm going to do like 100x leveraged short position on BitMax, which will follow the other markets, follow the spot, and then kind of manipulate on each side. I'm sure there's all kinds of shenanigans like that happening.
Yeah.
But personally myself, like I used to scalp a lot on BitMax and stuff, but it's interesting because like the longer, and it seems like I'm following a similar path to you in a lot of senses, is that the longer I start to trade, the longer my time frames end up becoming. And I've noticed that even Travis has longer time frames as well with his stock positions and such.
Yeah.
Just to kind of let things play out a bit more and for bigger gains versus like trying to get tick lock and just spend hours a day for a small percent. And it seems like I almost feel like there's a progression that happens within traders where, because like when I first started trading crypto, like I was like hyper scalping, I'd be scalping Dogecoin and like locking in gains on like 5 to 10 Satoshi moves and, like playing the leverage game every time Bitcoin dumped. I'd go in 3-day marathons, like scalping these smaller time frames. And then like as we got more into like a bigger trend. Then suddenly, like I was holding positions for like weeks to months, right? Letting
Mhm.
things play out. And now that we're like kind of completing a whole other market cycle, now I'm expanding and slowing down even more in my positions. Like, okay, well, prices are certainly getting low enough, and sure they can go lower, and I got to prepare for that. But I'm kind of like, my scope is thinking now like cycle to cycle, because there's some plays, having experienced like cycle here to where we're at now. I saw that some there's some benefits to that, being that had one accumulated, let's say Ethereum, Ripple, Bitcoin, Dash, whatever, and just obviously you don't know where the top's going to be. You probably would sell, take profit along the way. But if one could buy an accumulation and sell like at least a majority or a nice sizable chunk on the parabolic blow off, then ultimately that can not only produce like ridiculous gains, but also reduce the amount of taxable events, and also shift from like, as a trader, is like all of my trades are under business income because of high frequency of trades, but go
Yeah.
back into like capital gains of 25% and create less taxable events. So that's kind of how I've shifted gears in this. And also like the price action to me right now is just not really interesting. Like my bread and butter in all of this has always been the bounce plays. And in order for those bounce plays to really work, they need to bounce relatively quickly, right? To hit my targets. Like I'd be patient. I could wait like a month or so. But as we see, like even on this dump, which is fairly ferocious, like we dumped, and now we're just going sideways, and it's going on like months now. It's going on like 2 months.
Yeah,
So
that's
I'm
why
like,
there's definitely a big difference between like, a panic dump washout and, just like systematic, like grinding selling, right? Like those are two very different things. Real quick, let's do a couple more questions and then we can wrap it up. We've been going for quite a while.
sounds good.
Gimp says, given there's a chance that Bitcoin can drop to the 2K range, are you planning on selling any Bitcoin at current prices and rebuying? So I'll tell you my plan real quick, which we covered, but I'll recap it. I'm only sized in about 10% of what I consider to be like a full Bitcoin, fully sized into Bitcoin. So I wouldn't sell anything. I personally would. I'm just waiting to accumulate more. And then I'm not going to actively trade unless we get an actual trade set up that I feel really good about. For me, this is just the time to be patient. Again, I lean more on the conservative side in bear markets. And so that's my position. What about you, Rock?
My plan is, if we hit that 2K level, my goal is to dump all my Bitcoin and all my altcoins at 2K. Completely capitulate everything and flip my desk.
And then I'll buy them. I'll buy them.
Actually, I'm just going to sell everything to you OTC and then live in a shopping cart. That's my no. Basically, I talked a little bit about this earlier. If we do make it down to the 2K level, on a breakdown, any of those, like any mid caps I have, I might do some bag cleanup if we break this line right here, just to free up some extra cash. I've still got about 40%. Like I had 3 trading accounts. One of them is still entirely in cash, and this was profit that I had hedged up in the highs. So I still have that dry powder as ammunition that I want to put into longer term stuff. But also, if we do make it down this low, the Bitcoin that I haven't actually like bought Bitcoin as a longer term investment. I have bought some as a trade that I've been flipping into altcoins, specifically as a trade. But most of my longer term Bitcoin that are in cold storage are from 2015 and 2016. So if we do make it down to the 2K level, because It wouldn't be a massive taxable event. I think by cost basis is probably closer to the $1,000 area. It wouldn't be a huge taxable event. I'll probably take about a quarter of my longer term Bitcoin and add to some of the alt positions that I've been accumulating. I don't want to do it at these price levels because that would incur a bigger taxable event. So that's one thing that I'm going to do, and then I have some more dry powder for that. And that's just money that I've designated, that's either already in crypto or that I've designated specifically for crypto. That doesn't include anything that I pulled out of the crypto markets. And like I said, crypto is like a one-way street. When I pull hard profit out of the markets, I don't put it back in. And for me, there's a difference between hedging crypto at the highs on an exchange, and like I've actually had a bunch of money sitting on a few exchanges pretty much for like, you know, the latter half of 2017 and most of 2018, just sitting on exchanges and just like capital ready for trading. But that comes with counterparty risk, obviously. So as we go lower and lower into the prices, more and more of that capital is being siphoned off into owning my own private keys, controlling my own private keys, going into cycle to cycle. And I have no intentions, unless of course Bitcoin ended up at like $200 or something stupid. I have absolutely no intentions of taking any hard profits that I pulled out of the markets into the bank. Here's something interesting. I haven't actually bought Bitcoin with fiat, like money that wasn't made in the crypto market, since 2014. So like everything that I'm playing with is all money that was made through trading in crypto, or through like, you know, crypto passive income or whatever. But most of that, any passive income affiliate stuff, I was selling immediately when we were at 5 digits. Like I didn't keep any of that because I knew that, you know, first of all, it's a taxable event, and second of all, it wasn't really going to hold. So that's my plan. So I'll just end up buying some more crypto, and then I'll be done my accumulation, and then it's just kind of like the waiting game. And I would love, if it did happen, I would love for it to be faster, so that perhaps we can get a V bottom bounce. But like even here, you can kind of see like it was relatively fast when we were dumping here, and then it went from like faster, sharper sell-offs. We had like nice bigger candles that we hadn't actually seen in a while. Like this candle here was like a 17% candle, and then this candle here was, and this is the
that to me, that's like the initial breakout, right? Like in 2016, it's like the initial snap. That's like the initial break, and we had like a small inverse head and shoulders potential there, but it got run over pretty quick.
Like this 1 week candle right here was nice. This was like we hadn't seen this in quite some time.
Yeah.
This is like a 36% drop, but then you'll notice that instead of having a nice like V bottom, like we started to bounce, it just did a slow grind, and now we're sideways again, right? So it didn't like, whereas typically you'd get something like this, you know, you'd get like a sharp sell off and then like a nice green candle to kind of do a full retrace, but it hasn't done that. So it's been grinding. So I haven't really had the same edge or market conditions for my specific trading strategy of bounce plays. So I've just, instead of like fighting the market and crying about it, I just kind of shifted gears and shifted strategies. So.
Yep. Awesome. So, Millionaire Whale says, I think there will be no new bull cycle because the fuel for the 2017 bull cycle was Ethereum and the ICOs. What do you think about that? So I would actually say watch last week's class, because we talked a lot about this, about fundamentals and market cycles and what the next cycle would look like. But just a quick recap of that is like, yes, I agree that the 2017 bubble was caused in large part by the ICO boom, and several other things. And that's the thing. Each market cycle, when you look back at it historically, has a different story. What I mean by that is you have different fundamental driving forces. You have different things that happen. But even though each bubble or each market cycle is different from a fundamental thing, at its core, they're all the same. It's just price is a visual representation of the actions of all market participants. And so what that means is like each market cycle, there's a range of emotions from fear and greed, and markets go up and down for different fundamental reasons, and different events cause those to happen, right? So like 2014, for example, that bubble was caused by a lot of speculation in China. And it was kind of like the first time that a large percentage or a large number of people in the West heard of Bitcoin. 2017, I would say that this was Bitcoin's first real introduction to the masses, right? Like CNBC started talking about it. All the internet marketing get-rich-quick gurus were jumping on it. Celebrities, right? Yeah, like pumping, complete scams. So and then we ask, well, what could the next market cycle look like, right? And there is a possibility that crypto will never have another market cycle, right? But every time we think that, it surprises us and does it again, right? So I am very bullish on cryptocurrency and security tokens over the long term. The problem is most people are so short-sighted and so emotional that they miss the forest through the trees, right? They get so caught up on what's happening today and their own emotions that they miss the development. And that's really why we wanted to kind of change up the structure of these market updates and these classes, and really spend more time talking about the longer term picture and the development and the progress in the space, because there is a time in crypto for excitement and for active trading and for just like insanity where we wake up every day and it's like every day is like, oh my God, I can't believe this craziness is happening. And then there's other times that are extremely boring, right? Like 2015 was the most boring year. And for you guys that were with us around then, that, I mean, it sucked for trading, but looking back, that was the most profitable time in recent history to accumulate and to actually learn and develop skills. And so hindsight's always 2020. We don't know what the future holds, but I can just say, like, I don't think Bitcoin is dying. I don't think cryptocurrency is dying. If you just look at the human capital, if you look at where the progress and the innovation is happening, guys, it's not happening in the traditional banking system. It's happening here. This is where the innovation is. Follow the innovators, follow the investment, right? Follow the venture capitalists, follow the smart people that are trying to develop stuff for the world. And if you stay focused on that, it'll help you kind of think longer term and get away from that short-termism thinking.
Exactly. On the fundamental things that I use as a measurement for the probabilities of the next cycle is, number one, is the industry still growing? Right? Are there new developments happening, new investments, new interests from big players and so on and so forth? Obviously, we know there are with NASDAQ and New York Stock Exchange and all these financial institutions interested in Bitcoin and crypto and STOs. So we do know there's still growth, right? It's not like some stagnant token that's just dying.
Yep.
And then number two, has Bitcoin reached market saturation based on the amount of users coming into the space? Have we hit a max amount of users that will ever want to own Bitcoin? And we're still, I think, only like maybe at most like 50 million, maybe, right? Users that own a small amount. If you compare that to, the world population, there's still a lot of potential there. And then number three, does decentralized peer-to-peer money that doesn't require the permission of banks or governments, does that still have a value proposition for the world?
Yeah.
Right? And obviously in some places like Venezuela and stuff, it does. It's just always it's just good to have a plan B. It's good to have that choice, that alternative. So it's revolutionary in that sense, and it will always kind of serve that niche. That niche might serve either the person in Venezuela that has to put their life savings in, like say a few $1,000s to save their family from going completely broke on hyperinflation. Like you think these are shit coins, look at the hyperinflation there, or serve a niche of like multi-billionaires who are actually looking to have a hedge and to park some of their cash in something else, maybe a non-correlated asset class, or be able to transfer money really easily. We kind of saw a little bit of an example of that. Chris showed me this show called Billions, and I found it was funny on it because they were doing part of their trades they're doing was here's some $10 million of cryptocurrency on a USB drive was one of the things. So you kind of see it creeping into the mainstream, right? So similar to gold and stuff like that.
Yeah.
So I think it has a use. It definitely still has utility in the use.
Yeah, and Millionaire Will, you have a good perspective because he said, I've been in crypto since 2012, watch your videos on YouTube about Mt. Gox in 2014. Yeah, so I mean, you've been here, so you know what the market cycles are all about. You've seen the changes over time and the development. So yeah, I mean, I think that there will be another market cycle. We won't know until we get there. When's it going to happen, right? Like, when are we going to go back into the next cycle? And then B, what are the fundamental drivers behind it, right? We just won't know until we're actually there. That's why I think now patience is key. And now is just the time to really hone in, spend time developing your skills, spend time understanding the STO space, learning about market cycles, learning about human emotions, focus on your own emotions and your own skills, right, internally. And if you made some mistakes during the last market cycle, learn from those and make commitments that you're not going to repeat those mistakes the next market cycle. And then we move on, right? I mean, that's what this is about. And then if you have extra time outside of crypto, now is a great time to focus on, stocks or getting your financial house in order and, just building a good foundation there, or building, income streams, or focusing on earning more capital, right, that you can put into either private investments or crypto or the public markets, right? There's always something you can do every day to move yourself closer to your goals. And sometimes that right activity is focusing on the live markets. Sometimes it's stepping away and doing nothing. Sometimes it's, focusing on another market or another business, right, where you can build that monthly cash flow and stack that fiat. So when prices are low and we go into cycles, you have that ammunition ready to go. So
absolutely.
With that, I think we should wrap it up. We're going on almost 3 hours now. So
let's wrap it up. I'll stop the recording. Thanks for coming, folks, and we'll see you all next week. Cheers.